Good day to all. As always, welcome to our weekly market update provided by SE Securities. As always, we'll be taking you over some of the main highlights of the week with regards to the stock market, some of the news surrounding the local markets, and we will also delve into the bond markets, the commodities, and look at some of the global news before Harin, our technical analyst, goes over the all share and our pick of the week this week. So in terms of our stock market this week, it was somewhat tepid or stagnant. The market did post a recovery compared to last week, but one thing that we do have to highlight is that turnover was quite minimal up till Thursday. The 4 preceding days not even hitting 1.5 billion in terms of turnover. The all share on a weekly basis actually rose by 0.74% this week, whilst the S&P rose by 0.88%. Like I said earlier, the index witnessed one of its quieter weeks with turnover lagging. Friday saw a significant uptick, but this we need to actually highlight. This was actually an anomaly because of a significant stake being bought in Pan-Asian Power. So that actually is what really drove this turnover figure for the all share this week. If in terms of foreign activity, we saw a huge amount of foreign selling happening this week. This is mainly on the back of unfortunately, the country's macroeconomic situation somewhat getting even grayer than what we thought it would be. In terms of some of the news highlighting the local markets, so the main headline is yesterday, that is the 8th of July, the Central Bank of Sri Lanka had its monetary policy review. Now, this review happens on a 3-month basis, and we always look to this to see what is actually happening with the policy rates. Now, as people who have followed this weekly update are well aware, we have been citing or even stating that policy rates should be revised upwards. However, in the last monetary policy review, they decided to keep policy rates unchanged. Now, the main reasoning behind the central bank doing this is that they still feel that the low interest rate environment will actually aid or boost the economic recovery efforts via more local investors participating in the market. Now, whilst this rationale is sound, we still maintain that there needs to be an upward policy revision, as I stated before, just purely because of the inflationary pressures that persist. Now, there are 2 ways that we can combat inflation. One is actually raising the real wage limit or the wage, real national wage level. But to do that, Sri Lanka would, or the government would have to actually print more money than it is already. So that would actually put some more downward pressure on the local currency. So ideally, the only way to combat this right now is the interest rate. But we also do need to cite that if the current foreign currency reserve situation does not actually improve, we do see that in the worst case scenario, Sri Lanka going for an IMF bailout, which in which case one of the pre-bailout conditions or one of the major conditions in that bailout package will be that Sri Lanka would have to indeed raise its policy rates by a significant amount. In further news, the central bank is also discussing import controls on carefully selected items as liquidity injection triggered forex shortages and undermine the credibility of 200 to the US dollar peg of the rupee. These potential controls have still been kept on the discussion level basis, according to the chairman of the central bank. And in terms of new market entrance into the stock market, JAT Holdings formally announced on its 2.23 billion IPO scheduled for later this month. That's on the 20th of July. They will be issuing close to 83 million voting shares. The company will utilize the proceeds to expand into South Asia and Africa, having already consolidated their position in Bangladesh as the leader in wood coatings. You can expect us to actually put down a research report on the JAT Holdings IPO, hopefully within the next week, with regards to whether or not it is a feasible investment idea. In terms of the secondary market, the bond market remained at a lull. There wasn't actually much activity going on in the bond market. Well, the dollar market also remained inactive. The Sri Lankan rupee dollar markets did remain inactive. The interbank dollar yields rose sharply amid money printing, coupled with credit downgrades as sovereign bond yields rose. And in parallel markets, the rupee was actually quoted close to around 230 rupees to the dollar compared to 225 a week earlier. Now, in terms of the commodity markets on a global context, we saw the oil price fluctuate this week. This was primarily on the back of an impasse, an impasse occurring amongst the OPEC Plus members, as mainly on the back of the fact that worries mounted that members of OPEC could be tempted to abandon output limits that they had actually put on in place during the pandemic to actually keep the price of oil at a somewhat of a constant level. We still, furthermore, this was slightly exacerbated by the fact that the US said that they might also put some controls on their supply, but demand for oil seems to be going up, but this OPEC Plus situation seems a bit fluid at the moment. So in the short term, we might see somewhat of a sharper uptick in oil prices. In terms of other commodity counters, aluminium prices fell sharply towards the end of the week, fueled by talks of the US actually tapering on its open market operations. And gold prices actually increased on the back of fears increasing due to the Delta variant spreading across the globe, and mainly that the negative sentiment stirring on slower economic growth because of this new variant actually kicking in. And that is actually the same theme that follows to our global markets as well. We see that most of the global markets came in at the red on Friday, especially the Asian markets, after US stocks also suffered a slight wobble as fears persist of the Delta variant spreading, curbing the economic recovery efforts and this period of uncertainty remaining. A lot of the Asian stocks, such as the Nikkei and the blue chip CSI 300 index were down 2% and 1.2% respectively, whilst Australian shares fell by 1.6% given the current stay-at-home orders that operate in Sydney. European stocks also sank on Thursday, posting their worst session in over 2 months with all sectors in the red as recovery fears maligned investors there as well. So those are the key highlights from the global market news. Now I will hand it over to Harin, who will go over the technicals regarding the all share and our pick of the week this week, MGT. Over to you, Harin.
Thank you, Nuwan. So first, I'll be starting with the all share index. So currently the daily RSI is at 68.04, still in the mid range, and also we were able to see how the index closed above February 19th high, which was 7,821.39. So today, as for the week ended, we were able to see the market close, the index closed at 7,852.19. So if the index remains to sustain over February 19th high, we'll be able to expect again the daily resistance of 7,950, 8,000. So basically looking at the moving averages that I have used, which are 18 and 8 EMA levels. So looking at those, we can see how the index is basically trading above those EMA levels. So whenever the index is trading above, or any particular stock is trading above EMA levels, above the EMA levels, it remains to be bullish. So whenever the index is basically trading below, or any particular stock is trading below the moving averages, it remains to be bearish. So therefore, we can clearly see how the index came to a level of daily support level of 7,650, 7,700, and also we have two double bottom patterns over here. So in June 23rd, we were able to see it made a low of 7,634.78, and again on July 2nd, we were able to see how it made a low of 7,630.37. So there was from here, we were able to see from the this key area how the index managed to reverse and then close above February 19th high for the week ended for the week ended this week. So basically this week. So now once it actually sustains, about 7,821.39, once it keeps on basically moving bullish, we can expect the daily resistance 7,950, 8,000. So next would be MGT. So looking at MGT, once we touched on MGT, where this monthly basically previously this was the monthly resistance 1920, where 20 is considered as a strong psychological area. So we were able to see somewhat around a rejection from this previous resistance level 1920. So from here there were a couple of rejections. So once here again we were able to see a rejection, and then price moving up again, making a high of 19.9. It came down again, making a low of 17.9. So since MGT was trading about 18 and 80 EMA levels, we were able to basically see how the bullish momentum was carried again, and then breaking the current previous resistance level 1920. We can clearly see how it made it a support zone now, and a demand considered as a demand zone. So once it sustains about 1920 region, we can expect the stock to reach MGT to reach the weekly resistance of 22.5. So the current momentum seems to be at MGT strongly bullish. So we can clearly see with the trend line I have drawn that it is actually quite bullish at the moment. So even today we were able to see it opened at 19.2, and then it made a high of 21. It closed at 20.4. So within the next couple of weeks, yeah, if MGT sustains above this monthly support 1920, we'll be able to see how it moves to the weekly resistance 2022.5, and then a minor retest again to the monthly support, or else a breakout from this weekly resistance. We would be able to expect the monthly resistance 24.25. So at the current present moment, if it sustains about this monthly support 1920, make it a key, making it as a strong demand zone, it would definitely reach the weekly resistance 20 to 22.5. So thank you. Over to you, Nuwan.
Thanks for that, Harin, as always. And you all can, as always, check us out on YouTube for this video and many other insights that we have provided into the market. And as always, you can follow us on Facebook, LinkedIn, and Instagram. And to our client base, we will be sending across this report as well. So we look forward to having you all next week as well. And till then, take care and have a lovely weekend. Stay safe, everyone.